These are the various ways you can enter a trade, and by the end, I'll tell you which one I prefer the most. So we start by a very simple one, the stop order, which is basically price just breaking structure here, and you having your order set. Price just tags you in and goes. Another alternative of this would be waiting for the body closures. If the body of the candle closed above this breaker structure, you would look to place yourself on execution. Then we move on to the limit order, which is basically confirming that price wants to go higher by the breaker structure, placing your limit order on the order block, the initial one that took liquidity. This is where you start to get those sniper entries. Again, another example of a sniper entry would be placing yourself on the inducement or imbalance or FEG, whatever you like to call it. This way, because sometimes price doesn't come to tag the initial order block like you would here, but you get a tap on the imbalance, sweeps this internal liquidity, and then goes. You can see that on these two, your stop loss size will be way smaller than the stop one. But to your surprise, the actual one I trade out of these three is the stop order. I was mainly using this one, but then price would just run without me. I was dealing with a lot of trades that would just do everything I wanted it to, but then they wouldn't come to my entry. They would just run. So I had to adapt to that to get myself placed on the breaker structure, sacrifice a lot of RR because my stop loss is bigger, but at least be in the move and get a lot more wins.